It's a new month here at Henssler Financial, and we found three important things to focus on in the market this month. Number one, equity allocations. According to Federal Reserve data, the allocation of equities among households as a percent of financial assets has reached a new high, above what was seen in 2000. This is alongside mutual funds, pension funds, and foreign investors that also have record allocations to equity and limited relative exposure to cash and bonds. With returns for savings vehicles so low, this is understandable, but we see this as contributing to increased risk for equity investors as there may not be very much dry powder left. Earnings have been strong in the quarter, and we are entering a strong period for equity returns around the holidays, but rebalancing flows will be something to watch as market sentiment remains elevated. Number two, infrastructure. While the first iteration of the bipartisan infrastructure bill emerged in July, the White House has ultimately put pen to paper. The bill includes funds for roads, bridges, rail, transit, airports, and ports. This is in addition to funding for broadband and grid upgrades, as well as green energy initiatives. We'll be watching for management commentary in these relevant sectors, as the $550 billion in additional funding over the next 5 years should be a boon for a number of industries. Also, we will continue to monitor how these new investments ease some of the supply chain bottlenecks many businesses are currently facing, which is causing significant input cost inflation and goods shortages, which leads us to number three, taming inflation. The Consumer Price Index soared in October, seeing 6.2% year-over-year gains, the highest in nearly 4 decades. Price rises appear stickier than expected as the surge was broad-based across energy, shelter, food, vehicles, and services. This is alongside the Producer Price Index pacing at 8.6%, which tends to lead consumer prices. Continued high levels of inflation could put a damper on business confidence as margins compress and weaken the consumer as real wages fall. Longer-term inflation expectations remain grounded, but expectations into the next 12 months continue to rise. With the Fed meeting and taper likely on tap for December, markets will be focused on how commentary and policy changes around what appears to be less transitory inflation. The White House also notes that this issue has become a focus, so we will be watching how inflation expectations change into the end of the year. And that's been your Market Minute for the month of November. Thanks for listening.